TradingStrategy.com.
Hi, this is Chris again, looking at the upcoming Monday, August 11th trading session. In front of you, I have the economic calendar open. You can see it's actually a pretty light day, so it's going to be difficult to find a whole lot in the announcements that will move the markets. However, that doesn't mean that there aren't technical setups and the like. When we start out the day, we have some numbers out of New Zealand, which should have very little effect on the marketplace. We do have consumer confidence out of Japan, as well as machine tool orders, which can perhaps move the Nikkei, but really beyond that, maybe the dollar-yen pair. Really, we don't see a whole lot in this. We have housing starts out of Canada. Those, of course, will be a localized number for the USD CAD pair. As we press up against the 1.10 level, it's possible that a poor number may flood money out of Canada into the United States. Again, though, I think this is one of those deals where it's just simply going to add to any bullishness if the number's bad. It's probably not going to be the exact reason we move. We have very little coming out of Europe and the United Kingdom, as you can see. We have a consumer confidence index out of the Australian ANZ Bank. It's really not a big mover either. That's going to be localized to the Australian dollar, and quite frankly, it's probably not going to move that for that matter. And then we go into Japan, and it's very quiet. So really, we suspect that this is going to be a very technical day more than anything else. Looking at the stock market in the United States, the S&P 500, you can see that we did in fact have a very positive session on Friday here, as we bounced off of the trend line like we had suggested could possibly happen. Very bullish candle, and as a result, above 1940, it's probably going to head right back to 1990. Expect pullbacks to offer buying opportunities. 2000 still looms large as massive resistance, and as a result, might have to try to crack that a few different times. But quite frankly, this is a very bullish candle, exactly where you wanted to see it to continue the uptrend. Looking at the FTSE, you can see that we did form a hammer at the 65.25-ish level. Not exactly where we'd like to see it. We'd rather see it down here at 65, but this is something to pay attention to. I would venture to say that perhaps Monday won't be the day to trade the FTSE, unless of course we break above 6,600. I think this is just a sign that we are starting to slow the descent. Makes sense, there's plenty of support here. My suspicion is that this is one of those markets that should offer a nice buying opportunity soon, but it might be a little bit early at this point. Over in the pound-dollar pair, you can see we actually had a pretty significantly bearish candle. And the reason I say it's significantly bearish is because as I slide this line down to 168, it was an area that in the past has been important. We've broken down below it. I think at this point in time we're heading to the 1.67 level. Could be a little bit of a jagged move down as we slow the descent, but 167 should be very supportive. So this is a short-term selling opportunity in my opinion. And finally, looking at the Euro US dollar, you can see we get a nice bounce, but I still believe that 135 is massively resistive and that the markets will find a lot of selling pressure there. With that, I think that the 134.5 level is the beginning of this area, so it's not a big surprise that we pulled back a little bit. A little bit of a drop here could lead us back down to the 133.50 area. I think ultimately, though, this pair does go to the 133 handle. Look for short-term charts to offer selling opportunities. Probably selling off every time we rally, just selling the bounces as we go along. Short-term binary options, a perfect way to play this pair as we just continue to grind and grind down to the more significant 133 handle. And with that, we have looked at the Monday, August 11th trading session.